Hey guys, it's Linton here. We've seen quite a big bullish week last week on the Nasdaq. Let's dive into it and see what we're looking at now. The first thing I want to draw your attention to, obviously, is the fact that we had this big bullish reversal last week. Um, there's a couple things about it that I find interesting, and let's run through them quickly. So, the first thing is you'll recall that I mentioned this being a target level for the NASDAQ in terms of a support level at the 11,300 level, which is a 50% retracement from the all time high and the COVID low. Um, so, 50% retracement being a very big level of support, does that mean that it can't go down to the 61? No, it doesn't. So the possibility is still on the cards that that can happen. So you've obviously got to take note of that when you are planning your trades. But let's jump into what I find positive regarding this reversal. Firstly, the top of that bullish reversal candle for last week broke the high of the previous candle. So that's quite significant. Secondly, what I find very positive is the fact that although I would have liked to see a little bit more volume than this traded in this candle of last week, um, the good thing is that if you look at the volumes of the candles that went into this previous reversal over here, you can see that we traded quite a bit higher than that in terms of volume on last week. So that does bode well. What we're seeing at the moment is obviously a push off this 50, and we've hit resistance at the 38.2 retracement, which can be expected. I did mention the supply zone to the guys who are on my Discord server, my Discord channel. And if you want to join that, the link is in the video below. I did mention this supply area that we were going to come into, and I do expect some volatility around here. Um, so let's see whether this follows through. Um, I do believe it's quite possible that we will retest the body of the previous candle this week before we know which way we're going to go from here. So we could see price trade down to around about the 12,350 mark. And from there, I will be looking to see whether we get confirmation of further upside or whether we actually see a move back down to the previous lows. Uh, I believe it's more possible that what we are going to see is a trade up to complete this kind of structure, 1, 2, 3, 4 waves, before we see whether we're going to get this fifth wave down to the 61.8% retracement and then upside, or actually whether alternatively we cruise up from this side and break the previous highs. Um, we do have NFP this week. So that's probably going to be quite an important factor in terms of what's going to happen from this point onwards. So if we have a look at NFP, which is obviously this Friday, it's at 2:30 GMT plus 2, which is South African time. Um, we can see that the forecast is 320,000 jobs created. Um, on average, that is relatively low for the year. So chances are that that would bode not well for the dollar. And obviously, with the dollar coming off, if we have a look at the dollar quickly, um, if the dollar increases its bearish run that we're seeing at the moment, it's possible that that we will see indexes push on up. So, if the dollar continues to pull back down, which I am expecting it to do, sort of retesting in these kind of areas, the 9900 kind of area, we will see the indexes increase um, their value to the upside. So that would be positive for obviously for the Nasdaq, for the S&P 500, and those kind of shares. So I'm quite or instruments. So I'm quite excited about this reversal that we had last week, and I think that if we do get 320,000 or even less jobs created uh, this Friday, if we get that result, then that will probably not be good for the dollar, and we'll see that follow through in the indexes. An important thing to note when it comes to non-farm payrolls, guys, is it doesn't just um, mean that simply we're looking at this figure only. The previous was 428,000, so we're creating less. this month, which means obviously it's bad for the dollar. There are other things that are taken into account as well that you need to consider. If average hourly earnings go down as well, then that is very bad for the dollar. So if we have a lower amount of jobs created than what is forecast, and we also see lower average hourly earnings, that's terrible for the dollar. And we'll see a big sell-off on the dollar and obviously a push on the indexes. However, if we equal this forecast and we get an increase in average hourly earnings, that may be seen as positive for the dollar. And the reason for that is because people are earning more, and that's good for consumer spending, things like that. So you've got to understand those facets of non-farm payrolls if you're going to trade it. Guys, I hope that helps you with your analysis for this week. I am looking for a little bit of a retest to the downside on the NAS. And from that point on, I'll be looking at other indications on smaller time frames, flags, etc. That type of thing. In fact, let me show you quickly the flag that I am currently watching on the NAS. So if we drop down to the 1 hour time frame, it's actually quite clear. We can see that there's a nice flag formation happening over here on the 1 hour time frame. And it's not to say that this flag will definitely break to the upside, so that's very important for you to note. But we have this flag that's forming over here. It's given us 1, 2, 3, 4, 5 waves so far. And if we get a break to the upside, our target would equal that length. So we're looking at roughly just over 13,000, which would be a nice place to be. And it would take us above this high. So we would then have what we would call a trend reversal on a lower time frame. So we would have this kind of pattern taking place, which gives us higher highs and higher lows. So I hope that helps with your analysis. If it did, remember to give this video a thumbs up. It helps me to create more videos for you. Have a great trading week. See you with non-farm payrolls. Cheers.